Hey, welcome to Mackey's Retail Roundup. Let's wrap up Q1 as fast as we can, maybe in a body bag, maybe wrap some bricks around it, chuck it in the ocean because it wasn't great. Take it away, Mr. Jimmy Carter. As you can see, we've got a crisis of confidence, people. Right around February, we started talking tariffs, we started talking trade wars, and we started kicking the living crap out of every consumer facing stock that you can imagine. Discretionary down 19%. Confidence, literal confidence, the confidence that people say, it's the pollsters come out and they ask them in their house, are you feeling confident about the next 6 months? 12-year lows. That brings us back to like when the US credit was downgraded, all kinds of nightmares, trading a bunch of terrible recessions that never actually happened, which is why we're still here today. But let's sum it up. It's by the beginning of the quarter, basically, Walmart started us off with their earnings, and they were the first ones to come out and say, you know what, the consumer, not so great. Christmas was fine, but the consumer wasn't terrific. And they just took out Walmart stock to the woodshed. They beat the crap out of it, took it down from about 104 to 187 or so. But what defined this quarter and what made it really different is that no one came in to buy Walmart after that. They really weren't that bad, but they weren't that great either. And the stock was expensive going into the number. And what we saw was just sellers coming in. It's always easier to believe in the boogeyman and to run away. And sellers were apt to do that. If Walmart's missing, the thinking went, then Target's going to miss by 20 billion miles. And that happened for some companies. It didn't happen for others, but all the stocks were treated the same. And now your problem, and how we got to malaise rather than a dip screaming buy party, is that really Walmart, as we said, came into this kind of expensive play, trading at like 35 times earnings, which is really pricey for the planet's biggest employer next to the Chinese government. It just, there's no reason to get around to buying yet. It's still up 40% for the last year, 80% for the last 3 years. Anyone who loves Walmart already owns it. Let's debate, if Walmart's getting that sick, then let's take a look at some of the stocks that really got sick. Victoria's Secrets, to give one example of what just kind of craziness went on here. This stock 16 last August, when again, the world was afraid that the economy was unrailing. In this case, it was because of Japan. Then the Victoria's Secrets rallied all the way to over $50 in December. There resided nice and happy and up almost threefold, and it crashed. March 11th, it finished giving back every single penny of those gains. Victoria's Secret fell 68% from the highs. What's this company actually really worth? That's what everyone in the retail trading space is asking themselves about pretty much every company right now. The answer in Victoria's Secret's case, probably somewhere between $50 and $16 a share. I think we've shaken out kind of the doubters at this point, the people who were just relying on faith and liking the wings. They probably sold somewhere above 16. But we're getting shots at really much more interesting companies that are coming into a buy zone. Now, I don't know what Victoria's Secret's worth, but I have a good hunch what Williams Sonoma, that's another company that we've highlighted on this show. This stock down from way over 200 for no real reason other than the fears of recession. Finally reported last week, the numbers were pretty good. The numbers were great, actually, considering, they nodded to consumer uncertainty as every retailer has, whether they think it's coming or not, just because everyone else believes it. And you don't want to be the only sucker that refused to see the train coming. But Williams Sonoma didn't take the numbers down. They reported record margins. They have the best CEO in the industry, and the stock's off 35%. It's a good dip. If you wanted to short all these stocks, well, you should have been talking to us in January. Right now, Williams Sonoma, add that to your list. And it's on the list we'll talk about in a little bit of mine. But this is a stock that you don't want to miss in terms of the buy opportunity on it. Okay, so you're not that bullish on the economy. You don't think people are going to buy expensive coffee makers. Take a look at Ollie's. Pull up Ollie's for me. Ollie's, $120 per share. Now, this is kind of a lower end TJ Maxx. It's a nice store. It's a friendly store. It's where you go to get off price goods, which means markdown stuff, cheap stores. Ollie's, unlike all the other chains they hear about, is actually building stores. They're taking over real estate. And just because capitalism eats itself and regenerates, and it's a glorious kind of Darwinian process, Ollie's is one of the winners out there. That stock went down to 100. They reported in mid-March. And again, you saw finally a little bit of traction being gained. In other words, what we've gone through this quarter has been painful. It's been necessary. But stocks like Ollie, stocks like Williams Sonoma, we're getting a shot at some of these real winners that you haven't really had a chance at yet. And some of them you'd never even think to take a shot at. Take a look at the new staples, I call them. Cruising. There is no consumer on God's green earth more resilient than the cruising consumer. If Americans could rub two pennies together or spend one of them in the Copacabana lounge on some cruise ship in the Pacific Princess, and we're hanging out with Isaac and we're asking for the roofie colada because cruises are pretty much just lawless encampments floating at sea. It's every man for themselves, but Americans love them. And these stocks taken to the woodshed, down 20, 30%. The more levered, the worse they were down. Carnival finally reported last week this was the boogeyman. This was the one headed for the Titanic. Hyper levered with a lower end consumer. Those customers that are riding are usually riding Carnival. You won't hear that on the billboard. But when they came out to report, they said, listen, we're not seeing a single kind of increment, of dip of any sort. We're selling more trips at higher prices than we have literally in the history of our business. Things couldn't possibly be better. And of course, the market opened and took this stock down 8% right away. But then it started floating. And that's where I think we are in the market right now. I think you can start taking baby steps and start betting on, you know what? Maybe this doesn't turn out to be the worst recession in history. Maybe the trade war is a little overrated. Maybe, this isn't the end of times. The world's going to blow up someday, but it still is a shitty trade. So in the meantime, you might as well bet on America and start buying stocks. Do you need to do it all at once? Well, no. Guys, we've got a bunch of scary fears and it's going to take a while to digest. You have a lot of companies like Walmart. Yeah, I like it. I'm long it. I would love to own it at some point. And so what I'm doing now is taking my time and pulling back. I've got two strategies for you, and I made baskets to reflect these on the site. Members can sign up. They get to see it. They get to see these names. Basket one is a list of stocks that I need to own, that I want to own, that I would love to own if they got a little cheaper. You make the list for a couple different reasons. One, it's always good to have a list, good fundamental list, names that you want to buy. And two, this is the important part because you make the prices much lower to give yourself the discipline to buy. Walmart, for instance, about 85 bucks. I would buy it in the 60s. If Walmart did 60, I'll buy it all day, every day, twice on Sunday, but not yet. And so you put it on the list. You got an if then list. I've got 10 names for you. Those stocks are already starting to work. It's already signed. We have a bottom. Not chasing them though, because I've got the list. And basket two, I want to take a straight up contrarian play. I think it's time you can start taking some shots on these stocks that no one likes. I'm not talking about the most hated, biggest short bait stocks out there. I'm talking about companies that people simply don't believe in again. There's a big difference between the Coles of the world, which doesn't have a real reason to justify its own existence, and some of these companies that are a little more promising, sort of the new must-haves, the Williams Sonomas of the world, the Dick's Sporting Goods of the world, to name two names that we've already given out as kind of favorable observations. These are great companies, and they're misunderstood, they're underrated, and they're going to be there. You want to buy dips and ideally never, ever sell. That's our real goal, and that's the kind of trading market we have now. Hey, listen, thanks for tuning in. Thanks for watching. I appreciate you checking it out. I want to keep the conversation going. Drop me an email and let's just enjoy the journey, buy some dips, and be cool out there.